Hey, y'all, we got a lot to discuss today. So the Jackson Hole meeting came and went. For those of you that don't know, it's one of the biggest economic events of the year, and it's held in Jackson Hole, Wyoming, which is why they call it Jackson Hole, very original. But Powell spoke, the chairman of the Federal Reserve. This will very, very likely, actually guarantee you, this is the last time he will speak there because of the strife going on with him and the president, who again appointed Powell in his first term in office. And Powell indicated that the economy is weakening, which we saw actually 2 days after the last Fed meeting when we had those job reports that came through with significant revisions negative to the previous 2 months, which got the Bureau of Labor Statistics commissioner fired completely unjustly, but it's actually going to probably end up getting rates to move down because of the weak jobs numbers. Now, one of the things that Powell said that I thought was the most interesting, that was a lot. And I mean, there's just been a lot that goes on. I mean, the government is absolute bananas with what's some of this stuff that is being weighed upon. And I just can't help but point that out. But what Powell did say is he thought that the long-term impact of the tariffs would actually be mitigated by job losses, because when people are losing their jobs because things are going up, prices are going up, and then companies can't afford to pay people because their sales are going down, and then everything kind of goes down afterwards. So basically, the jobs report that got somebody fired is probably those numbers are going to end up being the same thing that makes the Federal Reserve cut rates. Imagine that. So next week, we do have, this was actually a really light week of economic data. Next week, we do have a few things that come out, most importantly, the personal consumption and expenditures index at the end of the week. But the following week, we have the jobs report. And, I mean, this next Fed meeting could not be more anticipated as far as rate cuts and exactly what they're going to do. A quarter point's priced in. You get a terrible jobs number, again, or a lot of revisions down. And you're going to, again, you're going to see bonds rally. You might get a half-point rate cut. Now, again, remember, when the Fed cuts rates, that doesn't mean mortgage rates go down, but it is a sign that the economy is weakening, and so that is where mortgage rates fall. That was a lot this week. You're either a lot more educated or slightly more confused, but if you need anything, I'm Zalmanoff, and I'm here to help you. Peace out.